Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So if you're looking at the SGX Nifty, that seems to have taken a big knock. An hour ago, it was trading absolutely flat, but now down almost 40 points in trade, at par with Asia, because most of the Asian markets have turned negative at this point of time. Some of the ADRs in focus. Infosys was up almost 3%. HDFC Bank was up 0.5%. What didn't do well were counters like Dr. Reddy's and Vedanta, which were down anywhere between 0.5% to 1%. As far as the commodities are concerned, crude is trading muted after 4 days of rally. Significant amount of traction that came in on Friday, gained 0.5% on Friday. Basically, the other thing that you have to watch out is the OPEC meet this week. So they will meet this week to consider supply cuts that could potentially come in. So oil this week again will be in focus. Now, as far as base metals are concerned, positive close for the base metals on the LME. That did well. Lead was up 1%. Nickel and aluminium were up almost close to 1%. The other metals, tin and copper, were up almost 0.5%. The only base metal that didn't do well was zinc. That ended with a negative bias. COMEX copper is trading with a positive bias currently. Even in China, if you're looking at it, the cues seem to be on the positive side. Copper and aluminium are up 0.5%. Steel is up almost at 0.3%. Rubber is the only one that is not doing well. It is down almost at 0.2% in China currently. Gold is trading with a negative bias for the third straight session. As far as fund flows are concerned, FIs were net sellers to the tune of almost 416 crores in the cash market. DIs bought in a similar amount. They bought in almost 427 crores in the cash market. On a month-to-date basis, if you're looking at it, FIs have bought in 16,500 crores. There's a little bit of selling over the past few days, but DIs have been aggressive buyers. They bought in almost 7,700 crores. So we are inching close towards another month of probably a 10,000 crore net buy. Nifty's ended with a positive bias for the 7th straight session. There has been significant amount of traction. IT and oil stocks performed while PSU banking stocks and autos were the ones that ended weak in trade. The Nifty was up almost 40 points. What contributed? Infosys, IT did well. The private banks, HDFC Bank, IndusInd Bank did well. What didn't do well? PSU banks, SBI, and the metal counters, Vedanta and Hindalco, they were down in trade. But Agam, what is the FNOQs indicating? 7 straight days of gain. Are put writers gaining the upper hand now?
Yes, it seems like that, Darshan. It's going to be crucial because we are heading into expiry week. So we've seen the Nifty once again edge towards the 10,400 mark. What we have now started seeing is a little bit of unwinding because of expiry. So a 6% decline in open interest, at least for the November futures, coming to the Nifty Bank. On the other hand, still longs building up. While the bank itself, the index itself, has just moved up as much as 0.2%, we've seen about another 3% added as far as open interest is concerned. Moving in, as far as the VIX goes, well, we've seen a decline still in the range of 13 and 14, not too much change there. But there has been a substantial amount of change when it comes to the Nifty put-call ratio, which has edged higher to around 1.46. But in terms of the big changes, at least as far as Friday is concerned, well, we saw most activity in the 10,400 put, which has seen substantial amount of writing coming along, and a little bit of unwinding in the 10,300 call as well. But in terms of stocks that we are watching out for, a few stocks which moved into the band, so GMR Infra and Syndicate Bank. On the other hand, we will see trade resume into normalcy for DLF, and TV18 have moved out of the FNO band. We're also watching out for Jubilant FoodWorks, which has seen a substantial increase in open interest when it comes to as much as 41%, while the stock itself has also moved up by as much as 5%. So a lot of longs building up there. These are some of the stocks that we will be watching out for. This is as far as our own markets are concerned. But let's also go across to Bloomberg News, Emma Chandra, who has more details as to how retailing and the Black Friday has come about in terms of sales and trends. Listen in.
The traditional start to the holiday shopping season in the US got off to a strong start this Black Friday. Retailers like Macy's reporting strong traffic and rising demand for beauty products, appliances and crucially clothes. This will be important information for analysts and shareholders who've been optimistic heading into this weekend, citing strong economic growth factors here in the US, as well as colder weather as providing a good foundation for the US consumer consumer to spend. The attention now, of course, turns to Cyber Monday, the traditional day for online shopping deals, though, of course, promotions have been running all month. The likely winners for online will be the marketplaces like Walmart and especially Amazon. That was certainly the case for Amazon last year, where they took 38% of all online shopping sales during the holiday season, and that's looking to rise to about 45% this year alone, meaning the pressure will remain for traditional retailers. Emma Chandra, Bloomberg News.
Back to Indian equity markets, the stock of the day is Excel Industries today. Good set of numbers coming in from the company. If you look at the revenue growth, that's 9% growth that we're looking at a figure of around 130 odd crore as compared to a number of roughly 119 crore seen in the corresponding quarter. A fairly good run in terms of net profit. That has risen by 67 odd percent at a number of 11 odd crore as compared to nearly 6.6 crore that we saw in the corresponding quarter. EBITDA for that matter, that has risen by 56% at 22 odd crore as compared to 14 odd crore that we saw in the corresponding quarter of the previous year. Margins have expanded at 17% as compared to 12% that we saw in the base quarter. So what has led to the sharp jump in profitability? A will be your net sales and also the cost optimization techniques that the companies have adopted. If you look at the raw material cost, that as a percent to your net sales, that has come down by nearly 4 odd percent and has now stands at 49% as compared to 53%. Even the overall expense as compared to your net sales have come down. Profits have risen despite the fall, the sharp fall seen in other income, which has declined nearly 74% on year-on-year basis. The company shareholding pattern, well, it's a good mix because it's more bending towards the promoter side, which currently stands at 52% as compared to the public shareholding at 48%. If I was just supposed to give a gist of what the company is all about, well, it's a chemical manufacturer that we're talking about and has a market capitalization of around 775 crore, and the company has reduced its debt significantly over a period of time. With that, let's talk over to Saloni for rupee and bond market updates.
Thanks for that, Nikki. The rupee on Friday retreated from a 3-week high and it ended 0.2% lower at 64.70 levels against the dollar on the back of renewed demand for the American currency. Now, surging crude oil prices ahead of the OPEC meet this week impacted overall currency market mood. However, strength in the local equities supported the home currency. Now, on a weekly basis, though the rupee appreciated by a good 31 paise, it was still down 0.5% against the dollar. On the global front, Asian currencies were trading lower, with Chinese renminbi and Japanese yen losing the most, while the dollar index declined for the third straight week on Friday after the dovish comments by Fed chair. However, it now trades marginally higher at 92.86 levels in the early Asian trade. Now, coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to bond market, yields rose for the 4th consecutive session on Friday and it ended 1 basis point higher at 7%. And lastly, global funds reduced their rupee debt holdings after infusing for the 3 consecutive sessions last week. They reduced their portfolio close to 240 crores according to NSDL data.
Well, amongst the stocks that we're tracking includes Adani Group of companies, as the Labour Party is closing in on a majority in Queensland, Australia. So you will have names like Adani Enterprises, which will be in focus. We also have a PTI report which is suggesting that JP Associates will or has fixed November 28th as the effective date for restructuring its $150 million FCCB issue. So the existing bonds which are maturing in 2017 will be exchanged for bonds which are maturing in 2021. So keep an eye out on that name. You also have Rain Industries, where its subsidiary Rain Carbon is looking to issue a new credit facility to refinance its 2021 bonds, which could bring down its interest cost. So keep an eye out on that name. We're also tracking Saturn Credit Care, where the company has said they will raise funds via convertible bonds, equity and preference shares, and that will be to a select set of investors, which includes the promoters, Cora Investment, IndusInd Bank, and also another investment fund called Nordic Microfinance Initiative Fund, and that will be at a price of 335 versus the current price of 388. That apart, we're also tracking a smaller name, GPT Infra, where they have said that its subsidiary has won an arbitration against NHAI and has received an award of 62 crores. So we might see a marginally positive reaction in that name. We are also tracking RBL Bank. They had a bulk deal on Friday where we wanted to know the name of the selling investor. It's Norwest Venture Partners, which sold 1.4 of its 1.57% stake, so a marginal stake remaining after Friday's deal. And you also have GHCL. That counter has seen a good run up in the last one and a half month or so. DSP BlackRock has bought 1% in this counter. So these are some of the names that you need to keep an eye out for.
We've stayed at the BBB minus and our outlook is stable. I mean, we've balanced sort of the strong GDP growth, the sound external profile, and the improving and monetary credibility, and of course India's fairly strong institutions against the issues of the fiscal, the large fiscal deficits and the high debt stock, and also the low GDP per capita that India has, which is amongst the BBB minus rated countries, is pretty much amongst the lowest in terms of GDP per capita. So we've balanced that out and we've maintained our stable outlook. Also, we've seen a couple of quarters of weaker than expected growth. Hopefully some of it is tied to the sort of teething problems around the GST and also the demonetization. But we've seen, a few quarters of less than stellar growth. But in our medium term, the trajectory is strong. So it's a combination of these factors.
Well, I can't see any reason, whichever way I like to look at it, for S&P to have kept their rating as stable. They themselves say that they expect robust growth to take place in the next 2 years. And when growth takes place, the debt to GDP ratio comes down, and household incomes and savings increase, so that resource mobilization becomes easier. Already there is a huge increase in investable resources sitting in the banks as a result of the demonetization, so that India has enough liquidity, enough investment resources, so that they won't have to take recourse to debt. But the most important point is that, these guys should be concerned more about external debt and not about total debt. And India's external debt is 12%, for God's sake. So where is the danger of India defaulting on its debt services? And if there is no danger, then why shouldn't these rating agencies be upgrading, why shouldn't they be upgrading their ratings for India? I just think that there is an incomprehensible bias in these ratings, which are probably, kept where they are to be able to earn higher rates of interest.
Very favorable comments that S&P has given in its report is an affirmation of the policies of Prime Minister Modi's government being recognized worldwide. The report has spoken at length that growth will continue to remain strong. They have recognized that the quarterly slowdown in GDP growth is a temporary phenomena, largely because of the implementation of GST, which has been praised at length in the report.
If you would look at the S&P's statement, in fact, their assessment, to my mind, on the debt profile of India is far more sort of generous, far more reasonable than others. So it's not that they have taken a very strong view about the fiscal position. I think they're fairly convinced. It's only the current state of play which might have affected their thinking.
Okay, one of the stocks that you have to watch out will be L&T, because Bloomberg reports that Schneider Electric is interested in acquiring the electrical and automation business from L&T. Till now, several newspapers have reported this, but now the valuation comes out. So the estimated deal size will be close to almost $2 billion. They also mentioned that they are in talks currently, but this may not fructify in a deal. So that's the caveat that they have put into the entire deal. JP Morgan is the only one that has come out with a report on the entire issue. On what they are saying is that valuations are fair. It's at almost 15 times current year EBITDA. The sales is almost $0.4 billion, and the valuation of $2 billion is almost 5 times current year sales for the company. The valuations sometimes trade higher because the industrial assets for India generally go in for a higher valuation. But at this point of time, valuations look reasonable because it reflects the long-term growth opportunity according to JP Morgan. And finally, they're saying that if you're looking at the strategy of Schneider, this has been in line with what Schneider has been indicating in terms of acquiring some of the mid and small size assets in India. As far as margin is concerned, margin is improving for the ENA unit. For the first half, they did a high single digit, and for the second quarter, they had margins in excess of 10% in the result that was just reported.
The government is planning to make changes to the Electricity Act for private players to set up charging stations in India. And this is because according to the Electricity Act 2003, only DISCOMs can retail power and non-DISCOMs are not allowed to do so. Now the government has a massive plan to shift to electric vehicles by 2030. R.K. Singh, who is the Minister of Power, told us that the ministry is planning to propose changes to the Electricity Amendment Bill for the private players to set up charging stations in the country. They will be provided deemed distribution licenses, and the government is in talks with the states to do so. This bill was introduced in Lok Sabha in 2014 and has been pending since then. Other amendments to the bill include stricter enforcement of PPAs and renewable purchase obligations. Now this bill is likely to be taken up in the winter session of Parliament this year, the minister had told us. Various clean energy companies like Fortum India are keen to invest in the charging infrastructure business, and what they have recommended is that it should be considered as a service industry rather than just resale of electricity in India.
India's largest homegrown e-commerce giant, Flipkart, now wants to sell insurance on its platform. Now, according to filing made with the Register of Companies dated September 21st, Flipkart Group intends to add insurance as a category on Flipkart.com, where it will act as a corporate agent and will provide life and general insurance on behalf of insurance on its platform. And now, according to the filing, Flipkart has sought an approval from Insurance Regulatory and Development Authority of India. However, it is not clear at this point of time whether Flipkart has indeed got the approval or not. Now, Flipkart mentioned in the filings that it aims to provide end-to-end transaction on the insurance platform, ranging from pricing, discovery, payment, and even after-sale services on the platform, but will not act itself as an insurer or underwriter. Now, Flipkart over the last 1 year has been trying really hard to diversify its portfolio in order to generate some revenue. Recently it's doing a pilot project of grocery in Bangalore. Then earlier this year it also introduced its private label Billion in India, and then also just earlier this month it launched its own made in India smartphone under the Billion Plus brand. And Flipkart sees insurance as also one of the important verticals for revenue generation, given that it can use its large customer base to sell the insurance products on its platform.
On brokerages, first we have is Credit Suisse on Mindtree. Now they have upgraded the stock to outperform from neutral and have hiked the target price to 600 from 460. Now they're expecting Mindtree to post industry-leading revenue growth and margin expansion from low base. Now they're saying that the recent earnings of the company were impacted due to revenue loss from some top clients and challenges faced by the two acquired entities, that is Bluefin and Magnet. However, these revenue challenges are behind as top clients are now stable, and the recently won clients are ramping up their revenue and are now in the top 10 client list. Also, business from Bluefin has grown in the second quarter of financial year 2018, and the revenue decline from Magnet appears to have bottomed out according to the brokerage. Now, the brokerage is expecting the company's FY20 EBITDA margins to be at 15% versus 11.6% in the second quarter of financial year 2018. They are also saying that the attractive earnings growth will be supported by the 23% EBITDA CAGR for the next 2 years. Second, we have Credit Suisse on oil and gas. Now they have upgraded Oil India to outperform rating from neutral and have hiked the target price of 425 from 325. For ONGC, they have maintained the outperform rating but have hiked their target price to 220 from 190. Now, according to the brokerage, higher oil prices is a double-edged sword for the upstream companies as it improves the financials of the company but also increases the near-term cash flow risk due to rising subsidies. Now, according to the brokerage, every $10 per barrel rise in the oil prices adds 22 to 28% to EBITDA and 20 to 30% to the equity value of ONGC and Oil India. Also, higher oil prices means FY18 budgets needs to pay for higher fuel losses. Additionally, OMCs have also paused the fuel price hike post October 2017, which is a speed bump on the path to zero subsidy. But these are all short-term risks. For a longer term, the risk return still remains favorable for these upstream companies as ONGC's capital expenditure efficiencies have improved, while Oil India has seen lower costs, which according to the Oil India management is sustainable. Now, oil around $60 per barrel is a sweet spot for both the upstream companies, that is ONGC and Oil India, because of strong earnings growth and low subsidy risk in financial year 2019. Now, they have raised the APS estimates for ONGC for FY18 and 19 by 8% and 2%, and for Oil India also they have raised the EPS estimates for FY18 and 19 by 10% and 9%. Going forward, the triggers for both the upstream companies would be restart of regular LPG and kerosene price hikes from Jan 2018, 20% gas price increase over the next 12 months, and cost efficiencies.
Well, there's a lot to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Commerce and Industry Minister Suresh Prabhu said that the centre will support iPhone maker Apple to set up its manufacturing unit in the country and is waiting for a formal proposal from them. He also said that the centre is willing to call on all state chief ministers who are willing to give them the best deal. And a single election ensures more effective policy planning and implementation and reduces pressure on resources. Prime Minister Narendra Modi said while calling for a discussion on the concept. He also echoed views expressed by President Ram Nath Kovind and Law Minister Ravi Shankar Prasad on separation and the balance of powers between the execution, legislature and judiciary. And the Bitcoin has now surged past $9,500 for the first time in less than a week after topping $8,000 and taking its year-to-date returns of as much as 850%. The price of the largest cryptocurrency by market value is soaring as it gains greater mainstream attention despite warnings of an asset bubble. And now, let's listen in to the Tradable Securities Satchidanand Uttekar as to what his outlook is on the Nifty.
We are expecting that the market should again retest the 10,300 mark and probably see a slide below that. But before that, the critical level from here on would be how it negotiates say 10,340 kind of a zone. And on the higher side, I think 10,420 looks like a resistance for the coming week. So probably it will be very difficult to gauge one particular level. But yes, in case if the market starts descending towards 10,340, then probably there's a good strong chance that we may see an expiry below 10,300 and probably somewhere close to say 10,170, 10,150 kind of a zone.
And that was all you need to know going into today's day of trade. An action-packed Indian Open is up next. Stay tuned in to Bloomberg Quint.